Welcome, everybody. Welcome, everybody, to Tax Talk with Corry. I hope that you can hear me. I'm going to turn off my share screen, and I'm hoping that you can see me. If somebody can use the chat option to let me know that you can see me and hear me. Okay, we have about 5 people in here right now. Can anybody hear me or see me? Maybe I need to turn the chat on. I think I do that all the time, don't I? I think the chat is on. I just put something in the chat to see if you can hear me. Okay, there we go. Everybody's ready to roll now. You hear me and see me well. I want to thank you for coming here today, spending an hour with me. Some of you have been here before. Others of you, this is your very first time. This is Tax Talk with Corry. My name is Corry Riley, and I want to wish everybody a happy SBDC Day. This is a national day that we want to recognize the small business development centers. We've been around since 1977, I do believe. And so we'll say almost 50 years that the SBDC has been around. It is a service offered to entrepreneurs looking to start a new business as well as to existing businesses throughout our entire nation. SBDCs in every state as well as our U.S. territories. And just here in Pennsylvania, there are 15 SBDC centers. So no matter where you're located at in Pennsylvania, I hope that you're working with an SBDC consultant. I am at, as you can see on the screen there, PennWest University, that is in Clarion, Pennsylvania. I am a business consultant. However, I have an accounting background. So I'm also an accounting consultant for clients across the state. You work with your local SBDC, and then they may refer you to me should they have questions that they're not sure how to answer, or they just kind of want to push off those questions to me to let me answer them, and then I'm more than willing to do so. So the way this session works, in case you have never been to one of these tax talks with Corry before, is that I'm going to open up with a brief introduction of a tax tip that was marketed for today, and then we're going to open it up to questions and answers. Any questions that you might have, you'll be able to ask those, and I will try to answer them, and I'll try to go through a brief order here. There is a Q&A button, so any Q&A that you have, any questions that you have, you can use the Q&A button. Also, there is the chat button, so you can use the chat as well to ask your questions. And if I'm looking off to the side, that is because I'm looking at another screen, and I have the chat in front of me. I have the Q&A session open in front of me, so I can answer your questions. I will also give you an opportunity to unmute yourself if you have a microphone active, so that you can actually talk to me and tell me what your question is. So you have 3 ways to ask your questions, okay? I want to bring this up here, just 1 second. Before we do get started, I just want to read to you a little bit of boring sentence here, 2 sentences. But basically, it's our disclaimer that you should have seen whenever you signed up for this training. Any tax advice that I may give today reflects our professional judgment based on our understanding of the facts provided to us and on current tax law. The SBDC is not responsible for misinformation, as this is a service offered at no charge to entrepreneurs and business owners. So please understand that I am not your accountant. I am not an attorney. I am a general business consultant bringing my experience to you, gathering about that much information to try to answer your question. Whereas if you're working with a business consultant one-on-one at your local SBDC, or if you're talking to your accountant, you're sharing a lot more information so that they can hopefully give you a better answer. Now, with that said, I do really believe that I'll be able to answer most of your questions here, and at least give you a path or a direction to go to get more information. So, first off, I want to talk to you today about charitable contributions. As a individual, you're going to put your charitable contributions, like to church and to other nonprofit organizations such as the American Heart Association, the American Cancer Association, the United Way, things like that. That's going to go onto your personal tax return on a Schedule A, which is where also like medical expenses, real estate taxes, mortgage interest, and donations go. However, most people cannot itemize today. The reason for that is our standard deduction on our personal tax return is just so large that it's really hard to get to that point. You may be thinking, oh, but I want to itemize. Back in the day, before the first Trump administration, our standard deduction was half of what it is right now. So, like, if you're married, I believe the number for a standard deduction for a married couple on their tax return is $29,200, I do believe. Half of that is if you're single. Okay. So let's go off of that $29,200. Back in the day before the Trump administration, that standard deduction used to be like half of that. Okay. It was easier to itemize. It was easier to add up those items I told you about in order to do what they used to call the long form. Today, that the standard deduction has doubled, and so it's hard to get to that. And that's okay. I'm fine with that personally. Well, I don't care whose idea it was. It was Trump's idea, but I don't care whose idea it was, because even back when it was half that number, my family once in a while could jump over it just a little bit, but almost all the time we were under that number. So now we have a much bigger deduction on our personal tax return, which ultimately helps me get some money back. Okay. So I wanted to introduce that to you very quickly because that's on a personal side, and you're going to hear this once I jump into the business side right now. So, a sole proprietorship, that is an individual business owned by just one person. Okay. If your sole proprietorship donates cash to a nonprofit organization, it has to be a nonprofit. So when you see all these GoFundMe on social media and it's for a family, an individual, those are not tax deductible. It has to go to an official nonprofit organization that has filed government documents saying that I am a nonprofit. So just remember that the rest of this conversation. If you as a sole proprietorship donate to a nonprofit, okay, as a business, it does not become an expense for your business. That donation will actually go over to your personal side to that Schedule A, as I just got done talking about, and it'll go towards you trying to be able to itemize. Most of the time, you're not going to itemize. So I don't want you to think that, oh, okay, so donations are worthless. Don't do it because I don't get any benefit out of it. One, you shouldn't be donating for that reason. And trust me, people do. Okay. Big businesses do as well. They do it for deductions. Okay. But that's ultimately not why you're doing it. So you're donating out of the goodness of your heart. You're probably not going to get any benefit out of it on your tax return unless you're able to itemize. Now, if you do a product donation, so you give away a free oil change because you're an auto garage or something, or you give away a toy because you're a toy store, that is going to be removed. Whatever you're donating is going to be like removed out of your inventory. If you have it tracked as inventory, it'll be removed out of your inventory, which will ultimately bring your profit down. Okay. So you do get a benefit out of doing product donations because you take it out of your inventory, which means it actually increases your cost of goods sold expense. And if an expense increases, it means your bottom line goes down, right? So as a sole proprietorship or also a partnership, because a partnership's taxed the same way, but there's more than one owner, then if you want a tax advantage, you would actually be better to donate a product that you sell than you would be to donate cash. So maybe create a gift basket or something like that. Okay, moving on. The S corporation. The S corporation, you are going to remove, well, if it's cash, let me start there, I guess. If it's a cash donation, it's really the same as the sole proprietorship in that it is not an expense for the business. It's going to flow over from the S corporation tax return over onto your personal tax return to Schedule A, where you got to add up enough expenses to be able to itemize, and most people can't do that. So as an S corp, donating cash, pretty much probably no tax advantage. Now, when it comes to donating products as an S corporation, there's really no tax advantage there either. Okay. The sole proprietorship and partnership, there was. The S corp, not really, because we're going to remove the product inventory out of your inventory, but it's not going to affect your cost of goods sold. Therefore, your cost of goods sold expense does not go up, and therefore your bottom line does not go down. It really has no effect on your income and expenses whatsoever. It's removed from your books, from your inventory. Okay. I don't agree with this. I don't like this, but I did the research on it to make sure this was correct. And so that donated product, whatever the cost is, and I should back up and say that with everything I've talked about so far, sole proprietorship, partnership, S corporation, uh, the um, uh, the amount that you get to deduct from the product that you're donating is at cost, whatever you bought it for, not at retail. And people are like, oh, I should get that. I don't, we're not going to argue about it. It's cost, okay, is what you get to deduct. So the cost of the products that you donate as an S corporation, that dollar amount, that cost will again flow over to your personal tax return, go on to your Schedule A, and you got to add up enough to get to to go over that threshold of like $29,200 for a married couple to be able to itemize. So that's the S corporation. One last one, and it's probably the more complicated one, but maybe it's actually more tax advantaged. Yet most of you are not C corporations. C corporations are a general corporation. They're taxed completely different than everything else that we've talked about so far. And today, at least in this 15 minutes, I'm not here to run through all these different business structures. You can ask questions if you want to. So a C corporation, any cash donations that they give, yes, it is a deduction from their profit. It's like an expense for their business. So they actually do get to subtract cash donations. Then you have product donations. Product donations are the same thing. It's going to, in this case, it's going to affect inventory. It's going to affect cost of goods sold, and therefore their bottom line is going to come down in a C corporation. A C corporation even has a benefit if they donate to certain places, not necessarily exact places, but if they donate to the ill, needy, or infants, such as food banks, shelters, and medical charities. Also, if they donate to schools or public benefit organizations, then there's an enhanced donation for these C corporations. And what it is they take their cost basis and they add 50% to it. No more than 50%, but they take their cost basis and they add 50% to it. That the IRS is saying is considered the fair market value of the product that you donated, and therefore they get to subtract that away from their tax return. So that's really strange, really different compared to every other business structure. And most people are not C corporations. So now in your mind, you're like, hey, I want to be a C corporation because I want to get more tax advantage out of doing donations. Yes and no. I mean, if you're just looking at donations, yes, that's a benefit. But with C corporations, there is what we call double taxation, whereas the other ones don't have that double taxation in the form that the C corporation does pay an income tax on on its profits. It's called corporate net income tax. They'll pay it on the profit. And then when the C corporation, after it's all done paying its taxes and there's still money left over, it will share with its shareholders, which would be you as the owner. It would share what we call dividends. And then anyone that receives interest or dividends personally will know that dividends go onto your personal tax return and you have to pay tax on those dividends. So not only did your profit get taxed over here on the C Corp tax return, but after it took what was left over and gave it to you as a dividend, and then it became taxed again, double taxation. So I'm not so sure that I would become a C corporation just for the fact that I want a charitable contribution. That's everything that I'm going to cover on the charitable contribution. I try to limit it the best I can to about 15 minutes. And I'm going to open this up to questions and answers now that you'll be able to ask me, and I'm going to try to answer them. They can be anything business related. So this is Tax Talk with Corey. So you may be thinking, okay, it's only tax related, but I have found by doing this more often that, I want to answer your tax questions, but I also want to answer your business related questions the best that I can as well. So feel free to throw them at me. Okay, I'm going to first go to the chat and see what's here. Someone is saying here, I remember when credit card interest was deductible back in the day. And I think, there we go. So I'm thinking that you're probably talking on the personal tax return. I actually don't remember that time there. So mortgage interest, and I know home equity loan interest can be deductible on your personal tax return if it's used for home expenses. Okay, but if you're using it to go on vacation or to buy a car, then it's not tax deductible. So that's interesting to know that credit cards used to be as well. As for a business, okay, bring it back to the business now. Credit card interest would be deductible on your business tax return if you use it for business related expenses. That's the key though, right? It has to be used for business related expenses. Okay, I'm going to go over here to the Q&A and see what's in here. Okay, skipping over some things in Q&A that was to me that were not related to asking questions, but somebody is saying need a business mentor, not score. Score, let me tell you about that because I don't know what your experience is, but a lot of people have good experience with score. Score stands for Senior Core of Retired Entrepreneurs. If you do a search for like SBA score, then you should find the SCORE website. And the most local SCORE that I'm aware of for where I'm at, I believe, is in State College. And if you're from the eastern side of Pennsylvania, there's probably one over in the Philadelphia area or something like that. So remember that these are individuals. If you look at the name of it, it says at the NRE, Retired Entrepreneurs. These are people that are normally retired, that have business related experience. They've owned businesses or worked in business, and they want to share their expertise with people. They have opened it up to pretty much any age of entrepreneurs now, even if they're still working, because I think they're having a hard time getting volunteers, retired volunteers that want to do this. So they're opening it up to any business person that wants to volunteer their time for this. They're similar to the SBDC. The difference is that I'm paid to be here and talk to you right now and every day that we work with you. Whereas the volunteers are volunteers. They're there to volunteer their time when they have the desire to help. Okay, when they they have a life to live as well, right? So whenever they're not doing something else, they're there. But a lot of people have a lot of good experience. They're a partner of ours as well. So we work with them. They're funded by the SBA. We're funded by the SBA. So it is a good organization. So check them out online. Okay, now I'm going to go to, let me see here. Okay, Andrea Brown, if you have the ability to unmute yourself, feel free to unmute yourself and ask a question.
Hi, Corey. I was wondering at what point should an LLC roll into or turn into an S corp or a C corp, what would the profits have to look like um, to make that change?
Good question. Good question. And before I answer that, I am going to ask uh, that people that are commenting in the chat and the Q&A, please be nice, please be kind. Let's not put anybody down, or I will boot you out of here. Okay. So let's just be nice to everybody. Okay, Andrea. So that is a tough question. Okay, but I can cover some of this. So I have my own small business as well, and I am an S corporation. So I'm going to tell you what I know and experience over the last over 15 years of owning my own business. So an LLC is originally taxed as a sole proprietorship or a partnership. And your question is, when should my LLC transition over to an S corporation? If you transition over to an S corporation, you as the business owner, or if there's more owners, you have to take out a reasonable paycheck from your business. So you're actually on payroll like other employees would be. When I say the word reasonable, we have to kind of go to the Department of Labor's website, the United States Department of Labor's website, and we can, sometimes it's hard to find, but we can find in there where there is a list of basically every industry out there and what the average pays are for those types of employees. And so, you as the owner of your particular type of business, we would need to find what you do in that business, like a general manager or hair, beauty. Sorry, I'm losing the word. You're the hair salon person that does the cutting of the hair. See, I don't have any. Or you're a dog groomer. Okay, whatever it is, we find what the average pay is, and you got to get to that point then. So if you're not to that point yet, you're not yet taking a reasonable salary yet. Or if you're taking more than that, so be it. And really, as the business owner, I always say that we need to find what the average amount is, and then we have to add more to that because you are doing more than that regular job. You are paying your bills. You are replying to emails, texts, and phone calls, and doing all that administrative stuff that a business owner has to do. So we got to tack on another $10,000 a year or something to that number. Now, this is just Corry speaking. Other consultants may say something a little bit different than that, but I think that from an accounting standpoint, which I am again, I think that makes the most logical sense. So you need to be able to take a reasonable pay. Now you might say, well, can I become an S corporation and not take a reasonable pay? Yes, you can be an S corporation and take a lesser pay, but then doing that, you're not going to be able to take out a distribution. And a distribution is where there could be more tax advantage coming into play. Let me see if I can bring something up here real quickly. It just came to my mind. Give me a second. I got to minimize a bunch of stuff here. Let's try. I think it's this right here. Hang with me there, people. There we go. Let me share my screen with you. I think if you see this, it will, you understand it a little. Okay, and yes, you can see it. Okay. So this is how S corporation is taxed. Let me run down through this here. So $100,000 in sales. Here are just regular operating expenses of $50,000, and then you're left over with $15,000 profit after you've paid yourself throughout the year as well. Now, let's assume that's not reasonable, okay? Let's assume that that's lower than what reasonable is considered, okay? Well, first off, on this pay of whatever you pay yourself, you as the employee of the business, you'll have Social Security and Medicare tax withheld from your paycheck. The employer also has to match that. That's what this top portion here is. I think you can see my mouse swirling around there. So you have to pay what we call self-employment taxes or Social Security and Medicare taxes on the $35,000. On top of that, you also have to pay federal income tax, state income tax, and local income tax on your salary. In addition to that, and this is an additional cost that you actually don't get benefit from your S corp, and that is you have to withhold and pay unemployment compensation. So the employee pays a very little amount of unemployment compensation tax, whereas the employer pays a bigger number, and that depends on your industry. The easiest, less risky industries pay like 3 point some percent unemployment compensation tax to Pennsylvania. Whereas if you're in the contracting business, I think it can be up to like 10% of that gross wage. So that is an extra expense that you, as the employee of your business, you're not going to get the benefit of it. You cannot lay yourself off and apply for unemployment compensation in almost all cases. Now, let's go to the bottom line though, where this profit is at, this profit of 15,000. There is a tax advantage, even if you can't take a distribution, which if I say that your salary is not reasonable yet, you cannot take a distribution. So I'm not going to talk about that yet. But on this $15,000 profit, you do have a tax savings in that you do not pay this 15.3% tax over here. What you do pay on the 15,000 is federal unemployment, or no, sorry, scratch that. Just federal income tax and state income tax. If you have the snipping tool on your screen, or you can do the print screen, you'd be really good to take a screenshot of this. Now, let's assume that your officer's salary is reasonable. Therefore, you're following the law, and now you can take out a distribution at the end of the year. Out of this $15,000, let's assume that you say in your mind, I only need $5,000 in my checking account to operate. Therefore, I have an extra $10,000 sitting in there doing nothing. And I want to take it out so that I can buy a swimming pool, or, or put money towards a car, go on vacation, whatever you want to do with it. Okay. If you take out that $10,000, you do not have to take it out as a paycheck. You just take your regular business check, you write your name on it, you sign it, write $10,000, in the bottom left-hand corner, write members distribution, and take it to the bank and cash it. You will not pay any more tax on that $10,000 than what was already paid. And look down in the corner down here, what was already paid? Federal income tax and state income tax was already paid on this. So you've already paid the taxes. When you take the money out, you don't have to pay anything extra. No unemployment compensation tax, none of these taxes over on the right-hand side. There is a tax savings. So with that said, let's go backwards and say that you're not taking a reasonable reasonable pay. That's at 35,000. Let's say reasonable pay was 60,000 and you're not there yet. And so you pay yourself $35,000. And let's say there's only a $15,000 profit, or $10,000 or $5,000 profit, whatever the profit is. There is like a tax savings in that, again, you're not paying the taxes on the right-hand side. You're just paying federal and state income tax. So there is a tax savings, but do remember that there is a unemployment compensation expense up here that you're paying. And if you are transitioning to an S corporation, that tax return may be more expensive. Your accountant may charge you even more to do the S corp than to do the LLC sole proprietorship or the LLC partnership. So you have a little bit of stuff to take into account to try to determine when is it best to do it. If you have enough profit and tax savings here from paying this self-employment tax on the right-hand side, if you have enough tax savings to cover your unemployment compensation and your increased tax return fee, then it may be beneficial. So I know I did not give you your answer exactly that you're looking at, but I gave you some stuff to think about. And this is being recorded, I do believe. So yes, it is being recorded. So this should be loaded up onto our YouTube in the next couple of days. And when you go to our YouTube, you got to do like a search for like PennWest, Clarion, SBDC, something like that. When you do find us, we have a playlist that has all of these tax talks in here that we've been able to upload. Okay. So let me go back to the chat if I can find it here. I move stuff around, so That was a great question. I could continue on it for quite a while. Uh, okay. So somebody's asking here on the chat, if I have an icon, one, yeah. If I have an icon on my website for donations to a nonprofit that allows website visitors to donate via credit card or send in a check, is it better to have direct donation links to the nonprofit, or is it reasonable if I want to set up a match up to a certain amount of all donations by having donations come to me, and then I forward all funds and the match to the nonprofit? Okay, that's interesting. That's good. Um, in my mind, more of a warm and fuzzy marketing idea, perhaps with a business deduction for my LLC. I am trying to get it to, it goes too fast. I have a conflict and need to leave in a bit, but I plan to listen to the webinar if I miss this answer. Okay. So let me think this through here. I mean, if you do a direct link, then yeah, I mean, it just directly goes to that person, to that organization. If it comes to you first, and then you match it, and then send out a grand total check, what's on my mind right now is that you would have to claim it as income then. If you are accepting money, because you're not a nonprofit, I'm assuming. If you're not a nonprofit, then you need to receive that as income into your business, which then you're going to pay it out of your business, right? And you're going to match it with another dollar amount. But you did mention you're an LLC. So if you're an LLC sole proprietorship or an LLC partnership, I guess, or even an LLC S corporation, right? They're all three the same there. It's not going to be a subtraction from your income. So you're going to claim it as income. If I donate $100 and you take it into your business bank account, you have to claim that as income, but you won't be able to write it off on your tax return. So you won't get a dollar for dollar write off. It's just going to flow over to your personal tax return, of which you may or may not be able to write it off if you're able to go over that increased standard deduction. Okay. So hopefully that answers your question. It's a good marketing idea. You kind of said, kind of a warm and fuzzy marketing idea. Great job. Great idea. And so, yes, as a marketing thing, to get yourself more well known out there, absolutely. You'll be doing it for that purpose and for the purpose of doing good in this world versus getting a deduction that you probably won't get. By the way, at the end of this year, the current tax stuff that we're under right now is set to expire. So whoever the president would have been, whether it would have been, one of the two, then either one of them would have had to have made choices as what they're going to do with the current tax rate. So I tell you that because this is going to be an interesting year right now that we're going to be going through into next tax season to find out what are going to be the new tax laws. Will they remain mostly the same, meaning they're extended, or will there be brand new tax laws? So this will be a really interesting year for taxes. For even if you're not into taxes, you as a business owner need to pay close attention to that so that you know how that's going to affect you. Okay, let me go over to Q&A. Okay. Okay. For an LLC taxed as a partnership whose income comes from transporting sand for fracking, what state taxes does it need to pay? Business income and receipts tax, net profit tax, and where should I register? Okay. So one is, I don't know if you've heard about the Penn State Law Clinic. If you work with your local SBDC, they would be able to tell you about the Penn State Law Clinic. They can help you out with different registration processes. You may also have to deal with environmental regulations. And so you might want to do a search on the internet for SBDC EMAP, and that's all one word, EMAP, because that stands for Environmental Management Assistance Program. So it's EMAP, SBDC, EMAP. It's a free service. It's part of the SBDC. They help businesses comply with environmental regulations. But and I kind of brought that up because you're talking about registering. So in general, registering Penn State Law Clinic, your local SBDC, of course, and EMAP. Now taxes, of course, you need to, you're already an LLC, so you should already have your business name. You should already have your EIN number. Sorry that I'm looking off to the side again because I continue to just stare at what you've typed here. You should not have to charge sales tax. You're not going to have a sales tax license. The business income and receipts tax, I'm not sure exactly what that is. If that's a state tax, that's a different one that I'm familiar with. Or it could be a more local tax depending on where you're located at. And so I can't answer the local taxes. The net profit tax, that normally is for corporations. So as an LLC partnership, I don't think you have to worry about the net profit tax. Let me think here. I gotta wonder, maybe there's a transportation tax that you may have to look into. And if your local business consultant can't get you the answer on that, if you reach out to me, then I can try to get that answer for you. But there might be a transportation tax. Also, you may have to worry about bonding. I'm not sure if you need to worry about bonding or not, seeing that you're doing transportation and you have like the big trucks on roads, back roads and things like that. Somebody's got to pay for the bonding of those roads. And I don't know if that would be the gas company that you're fracking with, or whether that's each individual company that drives on those roads. So you need to check into bonding. Where do you do that at? I've done that research before and I don't have that answer off the top of my head. I'd have to look into that again. I'm not sure if it's your insurance company or somebody that does the bonding. So good question. Not sure. Hopefully I led you down a couple little paths to look into. Okay, so let me open this up to Jasper. Do you have a question that you would like to unmute yourself and ask? Okay, Jasper's not. Let's try, while Jasper might come in here in a little bit, let's ask Cheryl Walraven. Okay.
Hi.
Oh, hey, how are you doing?
I couldn't get to the mute. Why is my camera on? No cameras? Okay, so I started an LLC this month and wanted to know, obviously I have no revenue at the moment. I have to plan on paying myself. How do I account for the salary when there's no revenue? Is it a liability? Is it something that I would pay myself once the LLC actually starts making money?
And are you an LLC sole proprietorship or an LLC S corporation?
LLC currently sole proprietor, though I do have a group that will be becoming a 40% owner at some point in the next month or so.
Okay, so you'll become an LLC partnership. Okay, so I mean, you don't have to pay yourself if the money's not there. You don't really have to pay yourself. I mean, but if you need the money, I mean, I hope the money's there to pay you then if you need the money. Otherwise, then I guess you do have to take out from like loans or something to pay yourself. Because I don't want you to do that. I don't want you to go in the debt just to pay yourself money. So I don't know all those different circumstances. That's why I'm just trying to hit a whole bunch of those there. And if you're a sole proprietorship, I mean, I understand LLC, but if one owner, that's one person, or a partnership where you have multiple people, then the way you pay yourself is you don't get a paycheck like you do working for a convenience store. What you do is like kind of what I mentioned earlier with the distributions for S corporations is you're just going to write your name on the check. You're going to write a dollar amount. You're going to sign it, and in the bottom left-hand corner, you're going to write something in the memo. So, as in the case of a LLC sole or an LLC partnership, you would write member withdrawal down in the bottom left-hand corner because you're members of an LLC. So member withdrawal, and then you take it to the bank, you cash it, and you spend it however you want to spend it. So then your question is how do I pay taxes on that? Because I got to pay taxes, right? So yeah, as a LLC sole or an LLC partnership, when you take out withdrawals, that is not an expense for your tax return. That is not an expense for your tax return. So if I were to show you, back up, share. Let's come back to the share here again. So yes, you can see it. Okay, so this was for the S corporation, but I'm going to go to, not there, right there, sole proprietorship. And so this is LLC, LLC sole or LLC partnership. Partnership, you just divide it by the percentages, right? And so if you this $50,000 is your regular operating expenses to pay your utilities and things like that. If you want to pay yourself anything, you take it out of this bottom line, which you don't have to wait till the end of the year. You can do it throughout the year, right? But whatever you take out of your business does not subtract away from this. It is not an expense for your business. So if you had hypothetically $50,000 at the end of the year and you're like, hey, I want to take out a withdrawal from my business, then and you say I want to take out $40,000 as a withdrawal from my business, that $40,000 does not get subtracted away from the 50. You still have to pay tax on the entire $50,000. So you're going to pay down here the self-employment tax on that other slide. That was what you were seeing on the right-hand side of the screen. This is your Social Security and Medicare tax. And you also have to pay on the $50,000 your federal, state, and local income tax. So when are these taxes getting paid that we're talking about? They get paid when you do your tax return right now. Your personal tax return as a sole proprietorship, because a sole proprietorship goes on to your personal tax return that you're doing right now, that 1040. The partnership tax return, which was due on Monday, also that S corp return was due on Monday as well. Neither one of them pay taxes. They're just what we call information tax returns. So they give information to the government, but they don't pay any taxes, because what they do is they create, or what I call spit out, they spit out these K1 forms, and these K1 forms that tell you what your profit is, your share of your profit is, or loss, if that's the case. That K1 then goes onto your personal tax return that you're doing right now, that 1040 tax return. It plays into that there. So that's how you pay your taxes, which then takes us into the next thing, which is really important, and that is these estimated quarterly payments. These estimated quarterly payments, your accountant that you should have will be looking at your overall personal tax return with the business stuff coming into it and everything else in it. And they will be able to calculate what they call these estimates, these estimated quarterly vouchers that you need to send in on a quarterly basis. Roughly, it's the IRS doesn't follow true real quarters, but anyhow, you send them in. You send 4 of them in a year, and the idea is you send it in throughout the year, so that come the end of the year when you do your tax return, you've already had paid in some, so you shouldn't owe a bunch at the end of the year. And really, if you get to owing X number of dollars to the federal or state government, you got to make quarterly payments, or else they penalize you if you don't make those quarterly payments.
And is
So,
that for the LLC, or is that for the S corp? The quarterly payments?
The quarterly payments would work for all of it. So the LLC, the S corp, all of those business structures, because interestingly, every one of those business structures, the regular sole proprietorship, the regular partnership, or the single member LLC, or the multi-member LLC, or the S corporation, all of those go on to, one way or the other, go on to your personal tax return. And therefore, those estimated quarterly payments will be based on your personal tax return. So make sure you have a good accountant. Now, I'm with the SBDC. I can't do your taxes, right? But if you do have more in-depth questions, you want to try to study this out a little more, then of course, come back to Tax Talk every month that we do this to ask your questions. But also, when working with your local SBDC consultant, ask them if they can answer these types of tax related questions. If they can't, say, hey, can you refer me to Corry that does this Tax Talk with Corry thing? And I'll be like, oh, yeah, we'll send you over to him. Okay. But I need to get a referral from them to me. Okay. Since you're assuming that you're working with a different consultant and not working with me. Good question. Okay, I'm going to look at another chat here. Let me scroll down. Okay, it must be that one there. Okay, when you go to the Department of Labor, would I type my area? No, I don't think so. I mean, just do a search on the internet for U.S. Department of Labor, and then it's just on that website somewhere. I do know that maybe this is what you're talking about. Once you're on the U.S. Department of Labor, they do have a way that you can drill into like regions of the United States, and I think even you could drill into the state. And so if you can drill all the way through that website to get to Pennsylvania, and even you can even break it down by a few different cities within Pennsylvania, if that gives you data that we're looking for to figure out your reasonable pay, then absolutely dive right into it so that you get your most precise information possible. And when you find that reasonable compensation information, you want to make sure that you save it, print it, save it, whatever you want to do with it, so that in case you are ever audited based on your reasonable pay, then you will have documentation that you utilized. Of course, you should also talk to your SBDC consultant about this, and they can even help you find this information. And also make sure you talk to your accountant as you're becoming an S corporation and wanting to do distributions based on making sure that you take a reasonable pay before you take a distribution. It would be a really good idea to talk to your accountant and make sure they're on board with the information as well. Great question. Okay, another one here on the Q&A. I'm a sole proprietorship and I've donated my services to a nonprofit. Can I treat that similarly to sole proprietorship product donation? That is a good question. Excellent question. So you've donated your labor, your services. That is not tax deductible. So let's say that you didn't tell me, no, okay. Let's say that you are a lawn mowing company and you go to a nonprofit location and you mow their yard and you don't charge them. You can take a write-off for your gas, repairs and maintenance that you might have had dealing with that, even the transportation to get there and back. Any of those types of expenses you can take. But your time, if it took you 1 hour and you normally charge $55 an hour, you cannot write that off in any way, shape, or form on your sole proprietorship, partnership, S corporation, single member LLC, and multi-member LLC. Okay, can't do it. Good job. Good question. Let me come over here. James Palmer, would you like to ask a question? If so, go ahead. Yes.
So that was the question that I had that you just answered.
Oh, I'm sorry. I was just looking. Go ahead.
I do have an unrelated question that is probably a little pretty wonky, but I'm interested in setting up a some sort of a retirement plan eventually for myself through my business. And that my business is sort of just a side hustle. I have a I have a full-time job and another part-time job, through which I have access to a 403b. Um, so I'm interested in a retirement plan I could set up that does not that avoids the 402g limit, so that I can, in theory, if I'm remarkably profitable, I could have a separate bucket from the 403b, so I could like max out my 403b and also max out whatever else I have access to in my small business.
Okay. So, I mean, I would have to do research on those to say what are the limits and such. Some people use, I think, what are called simple IRAs. That's an employer sponsored plan, but meant for small businesses and self-employeds. There's also an SEP, self-employed plan. I'm not sure what the P means, but SEP, that is also for small businesses. And then, of course, you can set up, different other types of retirements, but those are two that are, I believe, mostly meant for small businesses. Probably your best bet there is to go talk to a financial advisor, your local financial advisor, or wherever your employer financial advising is at. You could even probably use them. At least I know I can. Like, I have retirement here through the university that I'm at, PennWest Clarion. But I also have private retirement investments, like Roth IRAs and just like mutual fund type of investments through the same group. Okay, but it's completely separate from my employer, but it's through the same company because I like how my plan is producing through this company, so I'm going to put other money in there too. So you're probably best to check into those ones there to see what is your max. All of them will have a threshold though. So you may even say, hey, if my business is doing really well, can I have multiple different retirements? And then you do have to make sure you watch that if you have any employees. Normally those plans have to be available to all of the employees as well, not just you. So you'd have to look into those different types of plans as well. Again, I always defer and say, your local SBDC consultant, I would hope that they're willing to do that type of research for you. If not, again, since this is like kind of tax related, just ask for a referral to Corey. I'll see if I can get you some information on that as well. Good question. I wish I knew more about that one, but I do not. Okay, so okay, interesting. Can the S Corp salary be in stock equity? I'm trying to see what you're saying this. If you're saying Corey owns 100% of the S corporation, and I want to, and I want to bring another owner in and pay them, and instead of paying them a salary, give them stock ownership in the business. I don't think that would work personally. I'd have to maybe do some research on that. From my knowledge, I don't think that would work. Because by giving them stock equity in the business, that's a whole different tax realm that you're getting into. You're getting into maybe like capital stock or capital gains tax. Okay, by selling off stock is ultimately what you're doing. Even though you're paying them, you're giving that to them as like a barter for their service. Okay, bartering is taxable. So that would be like a capital gains tax, I think, that we're getting involved in. So I'm going to say no, you can't do that. Then if everybody sees in the chat, somebody shared, is this the Department of Labor salary website? And that sure looks pretty familiar. Let me see something here. I'm just diving in really quick. Yes, I clicked on some other buttons to get a little farther in there, and I just happened by chance click on, I don't even know which one I clicked on, but I see like marketing manager, the average hourly wage. is roughly like, you know, $65 to $75, and the annual mean wage is like $157,000. So yeah, that might be I was on the wrong thing, but anyhow, those numbers there. I think that is probably the right one. So yeah, keep digging into that. And I do believe that is the correct website that you're on. Good job. So everybody grab that website. If you didn't, go into the chat and take a look at it. Okay. So one person earlier said something about, you know, is there something better than Zoom? I mean, this is what we use as Zoom, but there's also Team Meets, I think it's called, or something like that, or Teams, Microsoft Teams, that's what it's called. And there's other video options as well, but the SBDC, most of the time we use Zoom. Okay. How to find the best attorney. So that's a hard question. It's like asking how to find the best accountant, or even how to find an attorney, how to find an accountant. Most places give you like their initial consultation at no charge. So you'd want to take advantage of that, sit down with them and then ask them, do you have experience in my industry? Do you have experience setting up LLCs, or do you have experience setting up S corporations? Do you have experience helping S corporations that have multi shareholders? Okay, ask them those type of questions, see what they say. I always say it's best to talk to your friends, your family, other your SBDC consultant, other people out there asking for suggestions. So like I don't know where you're from, and if you're not from my area, my region, I wouldn't be able to give you any referrals. But if you're from my area, my region, I'd be able to give you some referrals of accountants and attorneys that we as the SBDC we've worked with our clients and such, and we've had good feedback from them. So look for referrals is probably the best thing to do. Good question. Okay, let's see here. Caddy, do you want to unmute yourself and ask any questions? I see I did answer. Oh no, oh yeah, the fracking question. But do you have any other questions you want to unmute yourself? And while we're waiting to see if she comes on, it looks like Shira Horton, do you have any questions you want to unmute yourself?
Hello, everyone. So far, so good. I don't have any questions at the moment. You answered my one question about the Department of Labor.
Okay, good, wonderful. Okay, so I'm going to keep looking in here to see what I find. So another link for the Department of Labor's website, so y'all can check into that and see if that works for you as well. I'm going to come over here. Okay, so coming back like to Cheryl, who said about she started her LLC in March 2025. To date, I have not paid myself. And you just opened this month, okay? And you have no revenue. How do I account for the unpaid salary? You don't need to. I'm not sure you need to worry about that if you can't pay yourself. It's just you can't pay yourself. Do you set up? I think there was a mention like liability. Do you set up like a liability to pay yourself later on? I think you could maybe do that, you know, but I just think you're getting into more work. I'm kind of a simple guy. I like to keep things pretty simple and sweet. So I mean, if you can't pay yourself, you can't pay yourself. And then someday when you can pay yourself, you pay yourself. And you might set your pay at like at this level here, but you might be like, hey, you know what? I have some extra cash and I want to catch up for not paying myself and doing all that work before. So I'm going to increase my pay for a while. You can do that as the owner. You can increase your pay for a while and then bring it back down if you want to. In my own business, my business was going through a transition because my business partner and also my brother passed away on November 22nd. And so it created, you know, of course, a havoc on a business. Be prepared. Succession planning is huge, everybody. Be prepared for things like this. And to be honest with you, I wasn't. It's kind of like a building contractor who is always out there doing work on other people's houses. And yet they don't do the work on their own house because they're so busy out there. The same thing with me. So I did not do the best job at succession planning. I picked up pieces really quickly, but I learned from that as well. So even I'm not perfect, right? Nobody is. So ultimately there was a period of time where I did not take a paycheck. Okay. And once I got things figured out and got things back in order and felt, okay, I'm comfortable moving forward, I actually made up for that pay. I doubled my pay, gave myself an extra paycheck. By the way, I said I'm an S corporation, so I have to take a paycheck, right? So I beefed up my paycheck to make up for what I lost out on because I wanted my money and I had the money there. And then I'll bring it back down to my normal pay range is what I'll bring it down to. Okay. And the reason I don't want to keep it way up here is because I am taking a reasonable paycheck from my business. Okay. And therefore I can take advantage of the tax advantage distribution. So I don't want to keep increasing my pay way up here and not get much distribution. I want to keep my pay standard across the board, and then I can take advantage of a bigger distribution. Okay, what do? I created 750 virtual classes. That's a lot of virtual classes. You must have had a lot of time to do that. I'll go from trying to live on my VA pension to a multi-millionaire. I'm starting as an LLC. That's awesome. Yeah. Hopefully you're working with a local SBDC consultant or somebody to help you out with this. One thing with that we got to watch out for nowadays is, a lot of things are available on the internet for free, like YouTube and things like that. So even like this training here, if I were to charge for this training, you very well may not come to it because you could go somewhere else. So most of SBDC's training now are offered at no charge unless they're in person and we have expenses we got to pay for. And there are sometimes ones that are online that we have to pay for, that we have to charge for as well, because we're paying for some sort of expense to offer this to people online. And most people seem to understand when that happens and they pay, like I teach QuickBooks and I teach QuickBooks webinars. And people pay for that because they understand and must understand it. Maybe they don't understand, but I understand there's more of an expense involved there that we got to pay for things to be able to offer that. But people are willing to pay for this because it's very highly specialized. So with that said, Jasper, if you have a really specialty training that people will pay for, then absolutely people will do that. People will do that. Can Trump change tax laws? I mean, it's government. I don't get involved. I'm not into politics. I don't watch the news. I just skim a little bit of emails that I get. Ultimately, I would say he has to go through the legislative branches, okay, the House and the Senate and things like that. Although presidents have shown that they can do whatever they want to do almost anymore with these executive orders that somebody created years ago. So with that said, can he change tax laws arbitrarily? I don't know if he can do that through executive order or not. So he'd have to go through, I'm going to say right now, I'm assuming he has to go through the House and the Senate to get those tax laws passed. But every single president comes out with tax ideas and they propose that as like their budget or something like that. And then that's what goes through the voting processes through the House and the Senate and so forth. So, and again, going to be an entertaining year, and someone that loves accounting, I'll be paying attention to that. Okay, another question down here, and I'm going to wrap it up with this one here because I think this is all the questions that are typed here, and I think I went through everybody unmuting themselves. So if the payment made to a member of an LLC taxed as a partnership is not an expense, how is it classified in QuickBooks and what would the account name be? Member withdrawal? Great question, Caddy. So yeah, that is, it's true. It's not an expense. So you're going to create an equity account on your balance sheet, or if you in QuickBooks, you go to your chart of accounts, okay? And you create a new account and it's going to be an equity account. And you're going to call it members withdrawal. Now, if there's more than one member, it would be good to have, member-Corry, member-Caddy. Okay. And then when you write out a check to each of those members, then the I don't want to call it an expense, okay, but let's call it that, the account that you choose when you're writing a check within QuickBooks, the account that you choose will be member withdrawal or just withdrawal, probably member withdrawal would be better, dash Corry for X number of dollars. So it does affect your cash flow, it does affect your balance sheet, but it will not affect your profit and loss statement. That is an awesome question. I like bookkeeping stuff, so that was a good one. Good one to end on. Okay, well, thank you, everybody. I did run over by a little bit, but of course, those that need to jump off, they jump off when they have to. We do this every month, so keep an eye out for the next one. We try to keep this consistent on the same Wednesday of every month, but do understand that it does change from time to time, because if I'm on vacation or I have to be out of the office for a family doctor's appointment or something like that, then we do have to change it. But we really try to keep it as consistent as possible. So keep your eyes out. As you saw, 15 minutes roughly is a tax tip, and then after that it is open to Q&A from you. I hope you enjoyed yourself. Happy SBDC Day. Take care, everyone. Bye-bye. And you're welcome, everybody. Thank you.